Okay, hello and good morning, everyone. Welcome to JFD Brokers Church's Espresso with me, Darius Anucauskas. Today is the 20th of December 2018. So, welcome everyone. Welcome to this Thursday's morning session where we're going to have a look at the markets, a few charts, the usual stuff. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay guys, so now then let's jump into the charts. Now the first one I want to touch on here is Nikkei. Now I was looking at this one this week, and looking at the daily chart, you can see that finally the lower side got broken. So certainly yesterday we saw a sell-off in the equity markets, especially after the FOMC meeting and statement. So basically what we're seeing here is now the markets have declined, reacted in a negative way towards the increase of the interest rates. Certainly that could have been expected, but for now, basically what we're seeing here on Nikkei, so it's currently found its support near this low here, the low of the 26th of March. I do apologize. So found its low there, found its good support near that level, and that was approximately around the 20,345. So basically the lowest point of this year. Now of course this is becoming quite interesting here. Will this index make a new low this year, or will it actually bounce off of it and push back up here? Now certainly looking at this picture, we're still more bearish than bullish, and probably it's a bit of a difficult situation to be bullish here, but nevertheless maybe a bit of retracement we could get, and potentially if, let's say, this index fails to move back above the 20,970 level, then yep, I mean we could see maybe the bears picking up here, picking up the higher price here, and potentially enjoying the ride back down here again. So for now, guys, be very careful. Certainly keep on monitoring the 20,345 level. If it breaks, then your next potential area of support could be seen near this area here, which is not far from where it is right now, but nevertheless an important level that we cannot ignore, and that was the low of the 27th of September last year. Now this was marked here by it is marked here by the lows of the 27th of September, which is near the 20,210 level, approximately there. So this could be the next potential area of support. Further declines, of course, could be possible, and this is where we could then potentially maybe finally fill this gap that we had here between the 15th of September and the 19th of September. So and we could probably get towards this little high here that we had around the 19,910 zone. So certainly in between here we do have the psychological 20,000 level that could get broken, but again, for us to consider such a scenario, we need to see a nice good confirmation break here initially below the 20,345, and then probably for those who are more on the cautious side, you could in a way wait until this drops below the 20,210 area, approximately there, and then of course we could aim for these lower levels that I was talking about. But again, I'll repeat myself what I was just saying in the beginning. If this continues to hold, if this level here, this year's low continues to hold, then we could see maybe a bit of retracement back to the upside here, where we could maybe squeeze something out of it, something good out of this index. Jumping into gold, looking at gold yesterday, of course, also sold off. Initially, of course, we had a nice pop here above the 1251 level, but then, as you can see, quickly reversed back down. And let me just jump into a 4-hour chart in this one, so you can see that it's now currently trading below the pivot. Certainly, this is a bit of a bearish indication, but the only thing is that we need to keep in mind that we're still above this in a way, a bit of a tentative one, short-term upside support line here taken from the lows of the 13th of November. In order for us to kind of consider lower levels, we would need to see a break below that line, and also, of course, a break below the 1241 level, and this is where we could then aim for the for a retest of the 1233, or even actually going all the way here towards the 1230, which is probably more like a little bit of stronger support line here. As you can see, it acted as a nice area of support here back on the 3rd of December, and also a nice resistance on the 21st of November. So, but then again, in order to kind of consider that, in order to consider this level, we need to see a good break here below this tentative upside support line, and then eventually a break below the 1241 zone. On the upside, we're still looking at the 1251. Certainly, if this gets broken, but there is potential for this to go back up here towards yesterday's highs near the 1258 mark. And let me just quickly put that on the chart here. So this is the level to watch if we get a nice pop again above the 1251, but again, for now, be very careful with this. Let's see what he wants to do, because at one point it's trading below the pivot, which is a bit of a bearish sign. Certainly yesterday's sell-off didn't add much confidence to gold, but nevertheless it still remains above this little short-term upside support line. So as long as it kind of remains intact here, we're still going to aim for higher levels. Jumping into Aussie CAD now, this is a pair that I was talking about yesterday, and basically, quickly before I look at the daily, 4-hour, let's have a look at the daily. So yesterday I was talking about this, and when we were looking at this pair, it was trading around here. So of course also the sell-off got triggered by the by the FOMC. So it moved away from this key important area of resistance, which is near the 0.9670 level. Now it's not far, it's closer to this area here around the 0.9560. And let me just quickly jump into a 4-hour chart here back. You can see that now it's trading within this little range here. Certainly we did have an overshoot here above the 0.9670, but nevertheless it's currently stuck in this little range between the 0.9670 and on the downside the 0.9560. Now of course this level here on the downside will become a quite more important one for us today, especially today, because if the selling momentum continues, then yep, we could see a break below this and a further decline, maybe towards even the 0.9520 level, which was marked here near the lows of the 23rd of November. So for now, guys, be very careful here. We're now trading below this 200 EMA here on the 4-hour chart. So from the short-term perspective, this is still looking quite bearish. But again, for the bearishness, we need to see a good confirmation break here below the 0.9560 level, which is here and which was marked here by the lows of the 9th of December. So keep your eyes on that one. If this suddenly reverses strongly back up here and moves back above the 0.9620 level, which is also near the pivot, now this is where it could be a bit more interesting for the bulls. We could see this one maybe traveling higher again towards the 0.9670 level again for another retest, but for now, in order to kind of consider much higher levels in the near term, we'll probably take a more cautious approach here and wait until this travels back above the 0.9670. Of course, it could move towards the 0.97 level, where it could stall for a little bit. But if it's still no match for the bulls, then we could see further acceleration of the rate towards the 0.9775 area, which was marked here by the highs of the 2nd of December. So keep your eyes on that one. This is of course what's in regards to the upside, but for now guys, this is looking still more bearish than bullish. Jumping into GBPUSD, certainly we do have some news coming out today, later on, and of course that's the news coming out of UK. So we do have the retail sales and the retail sales figures initially coming out around 9:30 GMT, but for later on at around 12 o'clock GMT time, we do have the BOE interest rate decision. So keep your eyes on this pair. Certainly what you're seeing right now, and basically this is what I was talking about yesterday, and when in one of my previous videos as well. The 126.60 level is kind of continues to act as a magnet for this pair. As you can see in the past, it acted as a very nice area of support. A few times held the rate from dropping lower, but then failed on the 10th of December, and from there, I mean, from the 11th of December, when we had our reversal back to the upside, the pair kind of managed to get back towards this 126.60, but kind of continues to fail to kind of close the daily candle above it. So what we're gonna, of course, we're gonna continue monitoring this. We do have this downside resistance line running here as well, which kind of in a way continues to hold the bodies of the 4-hour candles here, as you can see. But and of course now we're getting a nice pop here to the upside, but then again we've seen these pops here a few days ago as well, so be very careful with this. I mean, we could see maybe a reversal back down. So yep, for us, let's say, to get more comfortable with higher levels, we would need to see a nice good pop above the 127 level now, in order to kind of consider further acceleration to the upside, where we could then aim for the 128. But for now you can see that it's still not far from the 126.60. This level continues to, like I said, act as a nice magnet for this pair. So if this fails to drive further up here, then we could see maybe a reversal back down. But then again, for the downside, we're still gonna keep on monitoring this 126.10 level. This is gonna be our gateway here for lower levels if we get a nice pop break here below, and this is where we could then aim for the 125.30. Jumping into euro dollar, so the euro dollar here is also now moving higher, at least trying to move back towards these highs, that these yesterday's highs, and yesterday at one point managed to reach the 114.40 zone, approximately there. But then again it was triggered by the FOMC and kind of sold off heavily, where it dropped towards the 113.65 zone. So basically this is quite a key important level that we're keeping an eye on. If this reverses back down today and drops below the pivot, then which is around the 113.90 level, this of course could potentially open the path again back towards the 113.65. But if that doesn't hold, we could end up testing this short-term upside support line taken from the lows of the 12th of November. Of course, you can see that it was broken once here, to be more precise, last Friday, but this week we quickly got back above it. So in a way, be very careful with this one. To be honest, now we're going to take a more cautious position here and wait until this drives back above the 114.40 level, and only then we'll consider further upside moves towards the higher levels. Jumping into USDCAD, now looking at this, certainly continues to trade around this upper bound of the rising channel formation. So yesterday also got a nice boost from the FOMC, and we saw the USDCAD traveling all the way higher here, testing the 1.3507 area, approximately there. So since then it kind of retraced back down a little bit. So currently it's kind of looking at this 4-hour chart, it seems that it wants to maybe make a bit of retracement back down here. The only thing is still you probably should remain cautious, and if you want to look at much lower levels, for example, at least aiming for the for this little short-term upside support line taken from the low of the 7th of December, we would probably need to wait until this drops below the pivot here near the 134.70 level. So a drop below that level could potentially open the path towards lows like the 134.45, or even actually going all the way here back towards the 134.25 here, which was marked here by the high of the 11th of December. And of course, this is where it could also test this little short-term upside support line. So, but then again, I'll repeat myself, in order to kind of consider such a move, we need to get a nice drop here below this 134.70 area, approximately there, which is near the pivot, today's pivot. So on the upside, well, if this decides to push back up here and break the 135.07 level, this yesterday's high, then well, you could in a way brace yourselves for a possible test of the R1 here, which is around the 135.20, or even actually going all the way here towards the R2 near the 135.60. But to be honest, just wanted to kind of quickly caution you as well in terms of the R2 here, probably slightly below that. We do have this quite interesting area here of potential resistance where the rate could stall, probably temporarily, and that's the 135.65 level. And just to kind of show you what that level is or was, going back into history here, you can see that last time it was tested here in May 2017. So it was tested here, it kind of continued to hold the rate down, and from which kind of the pair then sold off heavily and moved lower. So in a way, that's why this 135.46, area approximately there becomes quite an important one to watch. Okay guys, I hope you found it useful, and thank you very much for your time, and thank you very much for watching and listening. And if you want to join me later on my Traders Tea Time, and that's 14:15 GMT time. But for now, I hope you have a fantastic trading day. Bye bye now.